Ladies and gentlemen, welcome back to the channel. I've got two cryptocurrency news stories for you today, and then I want to share with you a little bit of my strategy when it comes to investing in a bear market inside of crypto, because what I do is a little bit counterintuitive than what you see and hear some other people saying. The two news stories I want to cover with you today is this first one here: on the brink of recession, can Bitcoin survive its first global economic crisis? The second one is Fed Powell's a U.S. digital dollar could help maintain international primacy. Okay. TLDR. Bitcoin survives. We end up with a U.S. digital dollar. That's it. But look, and I also want to just, the reason I want to talk about this today is because I see a lot of people that are new to crypto. Maybe they never really been through a bear market. And it can be really confusing when you see a lot of information out there. Now, I'm not a financial advisor. I'm not a financial expert, but I've been investing in crypto. I'm going through my second bear market now. And I think it's important to understand, like, now's the time you have to recognize, why did you invest in this space in the first place? What was the fundamental reason? If you invested because you were speculating, if you were investing because you were just hoping to get rich really quick because you know this asset class can go up really, really fast, now is when you have to do a gut check. Am I supposed to be here? Do I understand this? And you're going to have two options: get out or make a decision to understand, research, investigate, and see if you have conviction to stay in. And if you can build conviction in a bear market, then that's going to take you a long ways to creating what I believe is going to be a much more sound investment strategy going forward. And I'll talk about my investment strategy towards the end of the video. So first things first, on the brink of recession, can Bitcoin survive its first global economic crisis? Bitcoin has not seen a full-blown recession since it was launched as a response to the 2008 global financial crisis. Bitcoin was a response to the 2008 global recession. It introduced a new way to transact without depending on trust of third parties, such as banks, particularly failing banks that were nevertheless bailed out by the government at the expense of the public. So this is important. This is a part of crypto that people don't realize. One of the most important things about Bitcoin and some other decentralized blockchains is that you don't have to rely on a third party. So often in the cryptocurrency dApp space, we're always wondering what the developer's doing, how are they going to develop this project, how are they going to, inflate this token or deflate this token. At its very core, all of crypto, at its very core, we want to see more and more projects getting to a point where they're fully decentralized and we don't have to rely on the trust of third parties, such as banks. I would go as far as to say such as developers, such as companies. The central bank must be trusted not to debase a currency, but the history of fiat currencies is full of breaches of that trust, Satoshi Nakamoto. Bitcoin's Genesis block sums up the internet with the following embedded message: The Times, 03 January 2009, Chancellor on the brink of second bailout of banks. Okay. But while Bitcoin keeps mining blocks unfazed and its gold-like properties have attracted investors seeking digital gold, its current 75% comeback from 69,000 highs in November 2021 demonstrate that it's not immune to global economic forces. Simultaneously, the entire crypto market lost $2.25 trillion in the same time period, hinting at large-scale demand destruction in the industry. So I want to break this apart. First of all, I always find it interesting when people try to have this argument about crypto being digital gold, and then they say, it's particularly Bitcoin being digital gold, and then they say, oh, it's pulled back 75%. That's not digital gold. That's not a store of value. What you have is you still have a product that is in its early stages, is in its infancy. Let's face it. The only reason crypto is having these massive pullbacks, and 75% pullback is not rare. Bitcoin pulls back about 85% every 3 to 4 years. Richard Hart, the creator of Hex, has almost made that famous. He said it so much, and give that community credit for understanding that. But it has pulled back 85% every 3 to 4 years. Literally. In fact, not quite 4 years. The cycle is always shorter than 4 years so far. So a 75% pullback isn't shocking. And you can't call something true store of value if it's that volatile. But the question is, does that mean that it can't become a store of value? Does it mean that it can't become digital gold? And I would argue that, in fact, Bitcoin will become a version of digital gold before it becomes a version of currency long term. But the reason it's going to be so volatile is because we still have people that are treating it just like a speculative asset. But that's not going to always be the case. The more the world needs a trustless store of value that is digital, the more adoption we're going to see of Bitcoin. And long term, the more adoption that we have, the less volatility we will have. We already see less volatility in daily and weekly and monthly price movements than what we were seeing, 2-3 years ago. Simultaneously, the entire crypto market has lost $2.25 trillion in the same period, hinting at large-scale demand destruction in the industry. And now you've got people with Chicken Little. Oh no, the market's falling. It's over with crypto. And listen, I think overall the crypto market's going to go a lot lower. I think you're going to be naive to argue that it's not. And I'll make that case a little bit later in this video. But listen, those of us that are investing in this space, we understand bear markets is basically about opportunity. It's about realigning your core investment philosophy in this space. And it's understanding and maintaining the realization that it's a risky asset. But money is made on the bear market. I want to prove it to you. If we've pulled back from 69,000 to 20,000 right now, that's a 75% drop. But you understand, if we go from 20,000 back to 69,000, that's going to be what? Like a 350% increase. So you suffer a 75% pullback, but you end up making 350% if we hit new all-time highs again, say in the next year to 2 years or whatever, 3 years or whatever. So now's the time to invest if you truly believe in the asset class. If you don't, then you just need to get out and wait for the U.S. digital dollar, I guess. Bitcoin's crash appeared during the period of rising inflation and in global central banks' hawkish response to it. Notably, the Fed Reserve hiked its benchmark rate by 75 basis points on June 15th to curb inflation that reached 8.4% in May. Furthermore, the crash left Bitcoin trending even more in sync with the tech-heavy NASDAQ composite performance. The U.S. stock market index fell over 30% between November 2021 and June 2022. More rate hikes ahead, absolutely. Fed Chairman Jerome Powell noted in his congressional testimony that their rate hikes would continue to bring down inflation, albeit adding that the pace of these changes will continue to depend on the incoming data and the evolving outlook for the economy. The statement followed Reuters' poll of economists that agreed that the Fed would raise benchmark rates by another 75 basis points in July and will follow up with 0.5% increase in September. That adds more downside potential to an already declining crypto market, noted Informer Global Markets, saying that it would not bottom out until the Fed subsidizes its aggressive approach to monetary policy. But a U-turn on hawkish policy seems unlikely in the near term given the central bank's 2% inflation target. Increasingly, the gap between the Fed fund rates and the consumer price index is now at its largest on record. That's kind of crazy. This is what the banks pay to borrow money, by the way. So the Fed fund rate is what banks pay overnight to each other when they pay. It's the interest they pay to each other. So this is the interest that banks pay. And this is essentially the interest that Americans pay to survive. Do you see a problem here? Do you see a problem? I could go off on a tangent. I don't want to do that. But at the end of the day, inflation has to come down. I want to just make this clear. We will go into a recession if we're not already in a recession. And by the way, no one ever says when we entered a recession until after the recession is over. They're like, oh yeah, we entered it then. I'm telling you now, it's very likely we're already in a recession. We will go further into a recession. Why? Okay, at its core, keep in mind what inflation means. Inflation means that prices are high, and I'm oversimplifying this, but prices can only be high because people have enough money to pay the prices. In order for inflation to come down, what happens is you go through a season, if you will. You go through a season or a period of time when people can't afford goods and services. They just can't. Generally speaking, lots of people can't afford goods and services. There are a lot of people that are poorer, if you will. And because of that, businesses and companies are forced to do things to lower their prices. They're forced to, pull back in on product lines that aren't performing. They're forced to shrink their business. They got to stop expanding business. They've got to button down the hatches. People end up losing jobs, which makes the problem even worse. So there's a bit of a compounding effect. But ultimately, what happens for inflation to get brought down is people don't have the money to spend. And so inflation has to come back down. It doesn't mean prices are going to go to where they were at pre-COVID, for example, but it does mean that prices will eventually have to come down, and it's going to come down because a lot more people in the general population don't have money to spend. By the way, one of the reasons that happens is because an inflation is induced. A recession is created or induced by the Federal Reserve. They're raising interest rates. Again, I'm oversimplifying this for you. But when they raise interest rates, lots of things happen. Businesses can't expand. A lot of businesses get hurt because they rely on credit lines to stay profitable, and they can't maintain those credit lines because it gets expensive to borrow money. So lots of things happen. I'm not trying to make this sound too simple, but at the end of the day, I want you to understand that people will feel poorer before inflation comes down. And it literally has to happen because runaway inflation is the absolute worst thing that can happen to the average citizen of any country. If inflation keeps getting out of hand, the outcome is beyond disastrous, So unfortunately, we're going into a recession, and it's probably going to be a very deep recession. You said it here first. Crypto Wealth believes this. It's my commentary. It's not financial advice. But I do believe this because the Fed has been too slow to react. And there's a lot of reasons for this, and I can cover in another video. But basically, everyone who runs the Fed comes from Wall Street, and inflation, mild inflation, is really good for Wall Street. It's really bad for the average consumer on Main Street, but it's really good for Wall Street. And so the Federal Reserve has been really slow to respond. And the problem is now inflation's got ahead of them, and they're trying to respond, I guess, retroactively, if you will. They're trying to play catch up. And I think what's going to happen is they're going to induce a very deep recession trying to play catch up on this inflation. Bitcoin faces its first potential recession. Nearly 70% of economists believe the U.S. economy will slip into a recession. 100%, I believe that. Next year due to hawkish Fed, according to a survey of 49 respondents, yada, yada. To cap, the country enters a recession when its economy... Okay, let me just say this. So this big concern, what's going to happen in the crypto markets overall? Listen, if they raise interest rates, the stock market is going to tank further, and I believe crypto is going to tank even further. And I think crypto is going to tank way worse than the general stock market. And one of the reasons is because people rely on the stock market for their retirement plans. Very few people rely on crypto for their retirement plan. So people still see the stock market as a little bit safer. And there's coming regulations. Right now, there's coming regulations for this central bank digital dollar, for example. And in order to have a successful central bank digital dollar, there ultimately probably going to have to be some stablecoin regulations. That's bad for the market. If USDC, USDT, and all those stablecoins are required to have physical collateral on hand, and I'm telling you right now, none of them have it. And if the U.S. government had to go off the gold standard because they could not back every dollar by gold, a private company trying to serve private customers is never going to have enough liquid assets to back every digital dollar that they have. They're just not. The federal government can't do it. A private company is not going to be able to do it, which, by the way, is why I'm a fan of projects like Bean Money, and I'm a fan of algorithmic stablecoins, even though none of them have really succeeded in a fully decentralized environment yet. I'm a big fan of the technology. I'm a big fan of these cottage projects that are attempting it because I like to pay attention to them because I think long term I'm not going to say we have to have an algorithmic stablecoin that is truly decentralized, but I think it's going to make mass adoption and cryptocurrency a lot easier if we end up with one. So I'm a huge fan of that technology. If you haven't seen my playlist on algorithmic stablecoins, I'll link it above. And I also got a video on Bean Money on what it's doing. I'll link that above as well. You can take a look at it. I want to go through this just briefly. Fed Powell, a U.S. digital dollar could help maintain international primacy. So what he's saying is, if you've heard me talk about on this channel before, the U.S. dollar has to be the reserve currency of the world. It currently is, and it has to be for the U.S. to maintain its dominance. And so the Fed, that's what, I'm not saying that's a good thing or a bad thing. As a citizen of America, I believe it's in my best interest that the U.S. is a more dominant country than, say, China or South Korea or Russia, but each their own opinion. And I'm not saying that the U.S. is a perfect country. I mean, the U.S. government is a perfect government, far from it. But they're going to want to maintain their digital dollar, maintain the dollar as a digital reserve currency. And I've said it before on a previous video. They're going to have to catch up with what's going on with the central bank digital dollars. They're going to have to roll out their own. And by the way, fun fact, one of the reasons that America is not energy independent, I'm sorry, I should say that differently. One of the reasons that we have not gotten away from fossil fuels or done a better job of that, people don't realize this, is because part of the reason that we're able to maintain our hold on the dollar's able to maintain the reserve status is because of our agreements with OPEC, and they only sell oil in U.S. dollars. So if people were to go off oil, then we would be a long ways away from being. It would be very difficult to hold the reserve status of the digital dollar. I mean, if we were to start, if OPEC started selling their oil or outside of dollars, or if the countries around the world were able to start using some sort of renewable energy source effectively and efficiently, and we are so far from actually being able to do that any real way. But if that actually happened, then the U.S. dollar would be at risk of losing its reserve currency status. So the U.S. government doesn't want that to happen. So they're in no hurry to get off of oil, in case you've ever wondered, whether they're Republican or Democrat. They're never going to be in a hurry to get off of oil. But they know they need to create a central bank digital dollar. And I think this is important to pay attention to. The development of an official digital version of the U.S. dollar could help safeguard its global dominance as other countries issue their own. Fed Chair Jerome Powell said on Friday, weighing in that with generally positive remarks on a hot-button topic at the central bank that has left policymakers divided. A U.S. CBDC, central bank digital currency, could potentially help maintain the dollar's international standing, Powell said in introductory remarks to a research conference held by the central bank on the international roles of the dollar. Translation: how do we stay the most powerful in the world? The Fed has finished a 4-month public consultation period soliciting opinions on the idea of a digital dollar. Fed Vice Chair Lael Brainard has emerged as a key supporter, while Fed Governor Chris Waller has made the case against it. As we consider feedback, we'll be thinking not just about the current state of the world, but also how the global financial system might evolve over the next 5 to 10 years. 10 countries have already launched central bank digital currencies. Did you realize that? 10 countries. That's crazy. I knew of 2 or 3. Have already launched central bank digital currencies. Another 105 countries are exploring the option, according to the Atlantic Council, leading to fears the dollar could lose some of its dominance to China. The dollar remains underpinned by key fundamentals. Part of those key fundamentals is that OPEC only sells oil in dollars, including a commitment to transparency, the rule of law, and the full independence of the Fed, Powell noted. That's propaganda. In addition, the Fed's commitment to its price stability mandate contributes to widespread confidence in the dollar as a store of value. That's true. To that end, my colleagues and I are acutely focused on returning inflation to our 2% objective, Powell said. The Fed earlier this week delivered its largest interest rate hike increase in more than a quarter of a century, as it tries to stem a surge of inflation or in inflation. So we're going to see more rate hikes. It is going to most likely crash the economy. It will most likely crash crypto. So where do you go from here? What do you do? First of all, let me just say this. Ladies and gentlemen, if you're watching this video, I can only tell you what I do. And in my world, first and foremost, this is the time to make certain that we shore up our own finances. Make certain that you have job security. Make certain that you have your debts paid down. Whatever you can do to make your finances a little bit more secure. Go start that side hustle. Go create some additional income. But when it comes to actually investing in crypto, you always have to ask yourself, what is my fundamental underlying belief about crypto in general? And what cryptocurrency projects help support that funding underlying belief, meaning you have to have a foundational belief about the cryptocurrency market. My foundational belief is that the Federal Reserve and governments around the world historically debase their currencies, devalue their currencies, to the point that they ultimately destroy their currency. There's never been a government on the planet that has lasted long enough that has not ultimately destroyed their currency. I don't think this is going to be the exception to the rule. I just don't know when it happens. But I do believe that long-term cryptocurrency, primarily Bitcoin, is a major solution to that. That is the one underlying belief that I have. I believe that Bitcoin or a digital trustless blockchain similar to Bitcoin will be the currency of the future, not a central bank digital dollar. I mean, central bank digital dollars will happen on the way there. So that is one of my fundamental underlying beliefs. I genuinely believe that. Aside from that, what am I doing right now? Personally, and I can do a whole video on this if you want, but personally, I'm not like dumping crypto. I see a bunch of people talking about I'm moving to stable coins. The market could go lower. Listen, if the market goes lower, yes, it would be wise to go into stable coins right now. The problem is you're going to create a taxable event. So automatically you're going to owe taxes 20, 30+% by selling if you've made any gains at all. The other issue is you can sell now, but how do you know when to buy back in? How are you going to know now's the time to buy? And there's a saying that says you never lose if you don't sell. Well, I think that's a little bit of investment propaganda, but there is some merit to the argument. If the whole goal, if you were buying Bitcoin at 10,000, 20,000, then you probably still want to be buying Bitcoin. If you bought it from 10,000 up to 60,000, you probably still want to be buying Bitcoin, for example, or whatever cryptocurrency you're buying. And for me, I always love passive income. Those of you that follow my channel, you know this. But I start really paying attention to what are my core fundamental passive income streams. So I have three, right? I have trading is one, for example. I have three core fundamental passive income streams that I'm building. These are passive income streams that aren't short-term. These are passive income streams that could be long-term. And I really start paying attention. There's one, I have a small income stream that's passive for me that only makes me like between 50 to maybe $200 a month. And you know what? I started paying attention to it. And I've been earning on that thing for a couple years. I started paying attention and I was like, wait a minute. Even in a bear market, this income stream is doing really, really well. I need to put more effort into growing that particular income stream as well. So now's the time where you recalibrate your convictions. And by the way, I've got a free email newsletter. If you go down in the description, go to the Linktree link, subscribe to our free Crypto Passive Profits newsletter. If you go to that newsletter, and I'm about to overhaul this entire newsletter. If you sign up, there's like free streams of passive crypto you can create. Don't worry about that right now. They're all fine. They work. They're there. Just subscribe. Put in your name, email, phone number. Go ahead and enter your info. I'm going to end up overhauling this starting probably next month. And I'm going to start focusing on more of my more solid passive income strategies. Not just free passive income strategies, but strategies that are stable, foundational asset strategies. And then what I do, just so you know, is as I build those strategies up, the idea is to take those funds and use it for more risky investing along the way. But neither here nor there. You can always make a risky investment, but now's the time where you want to make certain that you're diversifying your risk, you're hedging your risk, and it's easy to do that if you have some sort of passive income. And if that's not your thing, you're like, I don't know, I don't really like the passive income thing. If that's not your thing, then it's dollar cost averaging, and understanding that you can't have crypto be too. Listen, if you are losing sleep at night over your cryptocurrency portfolio, you have too much money in crypto. I would stop adding to your crypto accounts if it's causing you to lose sleep at night. If you can't understand, if you had $100,000 in Bitcoin, you're sitting on like $25,000 right now. A lot of people can't. If you had $1 million in Bitcoin, you're on $250,000 right now. A lot of people can't handle those swings. And it just means that you're over invested right now for your own risk profile. So put more money, pay off your debt, put more money in real estate, put more money in traditional stock markets, go buy gold, go buy silver, do whatever you want to do, but do something, get some of those funds out of crypto, because for the foreseeable future, cryptocurrency will be the most volatile asset class that we have. For the foreseeable future, it's probably going to go potentially lower. Now, I'm going to tell you, I actually think there's a possibility we could see, there is a possibility. Now, when I say this, it doesn't mean I'm saying it's going to happen. I'm saying I recognize this as I'm investing. I recognize because we may go to a significant financial crisis, meaning the greatest mainstream Wall Street financial crisis that we've had in our lifetimes. We may be about to enter that season now. And if that happens, then we may see crypto hit its lowest levels in a really long time, meaning we may go to that 90% off of all-time highs for Bitcoin. We may see sub 5,000 Bitcoin, maybe even 3,000 Bitcoin, because people are not going to, most people who are speculating in crypto are not going to hold on to Bitcoin during difficult financial times. They're going to sell it to pay bills, and they'll sell it at a 75% loss. But if you are DCAing, dollar cost averaging, meaning you're making consistent purchases every week or every month, even at $50, if we get understand, if we do go down to say $6,000, for example, that means that if we hit all-time highs again, which I fully believe we will far and away surpass that within a couple of years or more, but that means you're going to potentially 10x every dollar you put in if that happens. So think about that. It's not about a 90% loss on the way down. It's about 10x on the way up. And I'm not saying that trying to encourage you to make an investment decision one way or the other. I'm just saying that you have to put it into perspective of your overall investment decision, and you can't get overly emotional because the rest of the market is emotional. Again, when everybody is zigging, you want to zag. When they're zagging, you want to zig. They're selling. At the very least, you might want to hold if you can. If you can't, then it just means that you're overinvested. And that's not a problem. We just adjust and move on. Listen, if you're one of my subscribers, I want you to come out of this bear market bigger, badder, and better. I believe that we literally are in unprecedented times right now. This market is offering an opportunity that some of us never thought we would see again. And if that means that you need to, your action is just to sell some of your crypto because you're over invested and it's making you, it's keeping you awake at night, these price movements, and you need to get more clear on your future investment plan, specifically the crypto side of your portfolio. If that's all you get out of the bear market, you're a freaking winner. You're a winner, bottom line. And if you're like, nope, market's going down, I'm going to keep DCA, dollar cost averaging, you are a winner. You're a winner because most of us believe we're going to have a bull market again, and it's going to be the biggest bull market of our lifetimes in crypto. You are a winner. If you're building additional passive income streams, and even if you're starting with free income streams or whatever, and you're building additional passive income streams, you are a winner. Period. End of story. And I want our community to freaking win. If you agree with me, go down in the description and say, let's do it for the win. Leave a comment. Let's do it for the win. Decentralized cryptocurrency equals freedom, ladies and gentlemen. This is Crypto Wealth. I'm out.